Hello and good morning, everyone. Welcome to another episode of the Market Snapshot series. My name is Rufus Kamau, Markets Analyst at FX Pesa. So today we'll be having a pretty interesting session. We'll be talking about the price of Brent oil, the current trends. We'll also be focusing on the West Texas Intermediate or US crude oil. We also look at the gold rally as the stock market's Plummet. So there's quite a number of developments that have been happening in the markets. And once we go through them, we also be looking at technical analysis, try to understand the current chart formations, structures, and potential market movements. And once we do these, hopefully everyone will trade from an informed perspective. So as always, this session is not investment advice. It is not a recommendation to trade. So you should always do your own due diligence. So let's get started. The main highlight of this morning is from OPEC. So as you can see here, OPEC just made an announcement, and this was a leak. It was not an official announcement, but either way, the markets are reacting to it. OPEC discusses another 411,000 barrels per day output hike in July. So crude oil is down on the headline as higher supply expectations continue to keep a lead on further gains. So this is the main highlight of the day. And of course, resulting from that action, we have seen crude oil prices trading lower than expected. And this could be the trend of the day. So since yesterday, with the market opening with a side gap to the upper side, we have seen oil prices dropping by about 4% before beginning to recover some of the losses. And we'll be looking at that chart later in the presentation. So on the economic calendar side, today we are majorly focusing on the S&P Global reports. So whenever you see flash manufacturing and flash services PMI, if you ever go to the details and look at the source of the data, you should know that this is basically reports that come from one company called S&P Global. So it does PMI data, which is released monthly in advance of comparable official economic data. So they go through various economies. For instance, you can see the latest data is from Flash Eurozone PMI. Dush is Germany. You can see we have data for the Eurozone, France, Italy, Spain, and so on. So they release the same data for various economies, including India, Japan, and even Kenya gets its own S&P Global report showing the performance of manufacturing and services sectors. So it's usually used as a leading indicator by investors. So I'll show you the site. So this is the S&P Global site. PMI data are released monthly in advance of comparable official economic data. So they do various economies. Here you can see Germany, France, Italy, Spain. There's Japan here, there's Australia, there's India, and very many other economies, including Kenya. So you can see Scotland here. You can see Ireland and so many other economies. I don't want to go through the entire list and bore you with the details. So you can see Brazil, you can see Zambia, Ghana, and so on. So at your own time, you can check out the different releases for different countries. I can even share the link on the comment section. So just remember something. Something I haven't shared. Just give me a sec. All right. So out of all these reports, we'll be going through the details for the main highlights of the major economies. So for instance, as of this morning, you can see that the manufacturing PMI for Australia came in at 51.7, same as the previous reading. So this is showing an industry that is expanding. Remember, 50.0 is the midpoint. So values less than that show that the industry is contracting. Values higher than that show that the industry is expanding. So the services were slightly lower to 50.5, down from 51.0, which was revised down from 51.4, showing that services are slowing down but still in expansionary territory. So core machinery orders from Japan improved largely, increased by 13% in the month of April. So this was a big increase from the 4.3% increase in the prior reading. And then for the manufacturing PMI for Japan, it was a contracting data. In this case, manufacturing PMI was at 49.0 as expected, a slight improvement from 48.7 in the prior reading, but still below the 50.0 mark. So going forward, we'll be looking at more data. I'm trying to refresh this. So the French flash manufacturing PMI came in at 49.5, a big improvement from 48.7 reading in the prior month. Services were at 47.4, a slight improvement from 47.3. Then for Germany, we had 48.8 for manufacturing as expected, an improvement from 48.4. Then for the services sector in Germany, a big slowdown to 47.2, down from 49.0. So the entire result for the entire EU countries, we had 49.4 in manufacturing, which was an improvement from 49.0. This was revised higher from 48.7. Then services were at 48.9, which was a big dive into contraction territory, considering that in the prior reading we had 50.1, which was revised higher from 49.7. So this shows that the services sector in the Eurozone is contracting, and of course, the manufacturing sector has been in contractionary territory. So we'll be looking at the reaction from that information, and also we know that we'll be getting more flash manufacturing and services PMI data for the UK at 11:30 a.m. Here, in this case, we're expecting that the UK is slightly improved in manufacturing to 46.2, and services may have jumped from contraction into expansion territory from 49.0 to 50.0 in the UK. So we'll be looking at this, and remember, this data tends to align with the currency. So if there's an improvement in both manufacturing and services, it tends to be positive for the currency. And if the conditions are worsening and you see manufacturing and services contracting, then it tends to be negative for the currency. So that will be the interpretation when looking at the UK pound at 11:30 a.m. going forward. So later on in the day, we'll be getting the US weekly unemployment claims. So this will be at 3:30 p.m. In the previous reading, we had 229K, and we expect 230K unemployment claims in the past week. So it's a difference of literally 1,000. And if you've been following the data, we haven't had as much variations in the expectations versus outcome. So if you look at the prior readings, you'll notice that we are mostly looking at 225, you get to 15, 222, 222, 224, you get to 41, 231, you get to 28, 229, you get to 29. So not much of a variation. So while traditionally unemployment claims have been known to cause a big market movement, recently they have been of little impact in the performance of the dollar. So unless there is a big discrepancy between the forecast and the actual data, then we should not be expecting a big move from the unemployment claims. However, at 4:45 p.m., we'll be expecting the S&P Global Flash Manufacturing PMI and Flash Services PMI for the US. So this is expected to be the biggest mover in the market, especially for the US dollar. Sorry for that. And some of the key highlights are in the expectations here. Apologies for that. So some of the key highlights here are in the expectations here. So flash manufacturing PMI is expected to jump straight into contraction territory from a prior reading of 50.2, which was revised lower from 50.7, is now expected to have dropped to 49.9. So if manufacturing goes into contraction territory for the US, and at the same time we saw GDP contracting in the first quarter by 0.3%, then this would likely mean that the economy of the US is risking a recession, and this is bad for the dollar. So at the same time, there is the services PMI, which was at 50.8 in the prior reading, which was revised downwards from 51.4. So in this case, we're expecting 51.0, a slight improvement. But then if we get a much weaker data point and a weak manufacturing, then that would be quite negative for the US dollar. On the other hand, if the two data points are priced to the upside, then that should be positive for the US dollar. So later on in the day, I will be getting a speech from Bank of Canada Governor Macklem, who will be holding a press conference at the G7 meetings in Banff. So clearly, it will be an important welcome speech. We don't know whether there will be any mention of monetary policy. But sometimes it's good to follow on these central banker meetings, because if something is mentioned and you're not aware, it could cause some increased volatility in the markets. So on other news, trying to look at the key highlights this morning. So Germany's private sector activity returns into contraction. So the HCOB flash composite PMI for Germany fell to 48.6 in May from 50.1 in April, well below the forecast of 50.4. So the readings showed that the private sector slipped back into contraction after 4 months of modest growth. This reversal was primarily driven by a worsening downturn in the services sector, even as manufacturing output continued to rise for the third month. So that's the key highlight from the EU's top economy. So services are flashing a red light in Germany. So Brent hits a 2-week low, and I believe this is the main highlight of the week or of the day. So Brent crude oil futures slipped below $64 per barrel on Thursday, hitting 2-week lows after reports emerged that the OPEC members are considering another large production increase. A hike of 411,000 barrels per day for July is among the opinions being discussed, though no final agreement has been reached yet. So this comes as markets were already concerned about oversupply following an unexpected increase in US crude stockpiles reported by the EIA last week. So adding to the bearish sentiment was a broader sell-off across financial markets, driven by concerns over the growing US deficit. Meanwhile, investors closely monitored developments ahead of the 5th round of nuclear talks between the US and Iran this weekend. The talks helped ease fears of potential supply disruptions in the Middle East, following media reports on Wednesday of possible Israeli strikes on Iranian nuclear facilities. So clearly, a big drop in Brent oil, which is expected to likely continue dropping for the rest of the day. So that remains a key highlight, and commodities are largely in the negative since the market opened this morning. So outside of that, time to find another key highlight. So one of the highlights that are not out of news or people are talking about is the increase in the 30-year bond yield in Japan, which, if you recall very well, in 2020 was praying in around 0.45%, which means that the yield was really low and it was capped by what we call the Japanese yield curve control program. So since then, we have seen a gradual increase. So from 2022, we saw it move all the way up and hit around 1.6. Then 2023, we kept moving higher. I believe we got 1.8. And then last year, 2024, we saw the same yields move to around what? 2.25. And then since this year started, from 2.25 all the way to 3.169, which is the current price. So a bond yield is basically the rate of interest that a government pays for its bonds. So if you've invested in a bond in Japan, then the current yield is 3.169. However, this does not change the bonds that were issued before. So for instance, if you are getting a bond, if you are buying a bond from Japan, at, let's say in 2020, the yield or the coupon on that bond would be at a rate of 0.5556. So it means that you get 0.5556 per year by holding onto that bond, and that doesn't change. So when the government keeps changing monetary policy and now it's paying 3.169%, then the government bonds become more attractive than the ones that were sold earlier in earlier years. So this basically means that for this person, if they wanted to sell their bond, they would have to match the return of the current bond. And that means that the price of their bond has really gone down. And once you do the calculations, we are looking at 40-50% drop in the value of the bonds. So this is quite alarming. And if the government is raising the yield on its bond, it means that the government is really desperate to get buyers for its bonds. So in such a case, we tend to see the government attracting more cash. We have also seen it in Kenya. So about 2 years ago, when the government was desperate for cash, it was issuing bonds, especially infrastructure bonds, at 18.5, even 19%. And when it was doing that, a lot of banks, a lot of financial institutions, and even individuals and corporates were buying these bonds to take advantage of the high yield. And the overall impact of this is more money going into the government and less money circulating in the economy. And that has the overall outcome of strengthening the local currency. So as a result, we saw the Kenya shilling strengthening, and also we are also seeing the Japanese yen strengthening. So in this case, we are looking at one case where Japan, which is the largest holder of US treasuries, experiencing very strong growth in the 30-year bond yield. And with this kind of growth, then the overall expectation is that the Japanese yen continues strengthening. So we'll be looking at that shortly, try to understand the performance of the yen and where the yen might be headed next. Then we'll try to identify trading opportunities based on that. So as of this morning, if you look at the performance of the yen since the market opened, the yen is the biggest gainer among the major currencies, being up 0.43%. The Australian dollar is closely following with 0.3% gain, whereas the weakest currency seems to be the New Zealand dollar, which is down 0.09% to the USD. So if you extend this to a week and look at the performance of the major currencies for the last week, then the Japanese yen is the biggest gainer. It's up 1.78%. The euro is up 1.45%. The Swiss franc 1.45%. The GBP or the UK pound 1.14%. New Zealand dollar 0.93. Australian dollar, which by the way experienced a rate cut, is still up a slight 0.81%. And the Canadian dollar, which is a currency that is largely affected by oil prices, and now that oil prices are moving down, it's slightly up by 0.79% against the US dollar, and the US dollar being the weakest currency among peers. So with that in mind, I believe we should focus on the next one. So the US is also experiencing something similar with its 30-year bond. So notice that the yield on the US 30-year bond at the year 2020, that's the COVID year, It was around 1.3914%, with a low of around 1.2%. So you'd be buying a bond that yields 1.2%. But now, year over year, we have seen gradual increases, with the highest return being this was 5.19, and now we are back to the almost the same level. So the last peak was in October 2023, and now the bond yields are rising again, and now we are looking at 5.106. So this is quite alarming because it represents an increase in bond yields, which also reflects on a decrease in bond valuations. And in such a case, it means that it risks a lot of third order effects. And one of the key things we should be seeing from this is the US dollar strengthening, but it is not, because the economy is pretty weak. So the US economy recorded a contraction in Q1. Of course, later in the day, we'll be expecting to see the S&P Global numbers on manufacturing, as well as the services sector. And Trump's tariffs have not been helping, which risk an increase in inflation in the US economy. So it might force the Fed to change its policy, because it increases the burden on the government, especially on existing debt, which is way above $31 trillion. So looking at the returns on all bond yields in various economies, in this case, we are looking at the 10-year. So United States at 4.58, UK at 4.78, Japan at 1.57, Australia 4.5, Japan 2.65, Brazil 14.215, Russia 15.76, India 6.24, and so on. You'll notice that the overall performance as of this morning is majorly to the upside. So whenever you see bond yields increasing, it's usually a bad signal about economies, mainly because if governments are borrowing more, or if governments are not attracting enough capital, so they are having to increase yields in order for them to attract more capital, then it becomes a big red flag. So if you look at the market reaction as of this morning, you'll notice that it's quite different from what we were seeing in the prior couple of days. So on one side, if you look at equities, they are all on the downside. So if you look at the Dow Jones, notice how it has performed this week. So it's one index that had made a very big recovery, but then the last 2 days have been pretty clear that the market is going back downwards. So from the 4-hour chart, this is how it looks like. And remember, we had a gap to cover here. I'll just remind you of this gap so we don't forget about it. So 2 weeks ago, we saw the market opening with a big gap and failing to close it. So the Dow Jones kept going higher, pulled back, and even higher earlier this week. And now that we are seeing a strong bearish momentum, now it's time to consider the Dow Jones will be looking to close this gap. So in this case, drop to around 41,290. So US Tech 100, we mentioned that it is still in some form of consolidation. And in this case, we expect the consolidation to continue. So in this case, we have seen the market move towards the lower side. But one key thing to notice is that the sequence of movements here, we can see that every single day the market was testing the upper trend line. But in the last 2 days, we haven't seen that happen, which likely means that the market was unable to form higher highs. So if you look at the high yesterday, didn't break the previous high, which implies that we could be seeing a breakout towards the lower side. So now the case to consider is if the market breaks towards the lower side, which would represent a nice short selling opportunity in the Nasdaq 100 index. So here, a potential move that breaks below here would lead to a very nice sell-off. We also seen the SP 500 break out of this bullish channel. So we know that the market was following this path, broke towards the lower side, and now we could be seeing the market going for the base of the pattern. So the base of this pattern is around here. So good chance that we see the market follow the book structure and complete the journey to 57.93 price action level. So Bitcoin has hit a new all-time high yesterday and also today. So yesterday was a slight gain a slight gain over the previous high. So if you look at the daily time frame, this is the previous high. Yesterday we slightly improved on that, but then this day today, we have seen a price we have never seen before, and this is $111,864 per Bitcoin. So clearly a very strong bullish momentum, and now we are getting some nice pullback coming in. And if correlations are anything to go by, and seeing US equities track back downwards, then some form of pullback would provide more entries for bullish positions. So the US dollar index has been on a lengthy bearish momentum. Clearly, we broke the support area that we talked about on Tuesday, which now leads to the likely outcome that the dollar index continues with this bearish momentum and could potentially test this area here. So we are looking at a level of around 98.957. And if this plays out, then we could be seeing other currencies taking advantage. So let's look at some of these currencies. So the dollar against the Swiss franc. The dollar was pretty weak against the Swiss franc earlier in the week, but yesterday in the afternoon and today in the morning has been a bit stable. In this case, I remember a week ago we had projected a rally to this area here, but then the dollar became weak and other currencies are taking advantage of that. And given the situation we are seeing here, I would say this is one market that is barely consolidating, and at some point we should be having a breakout. So we should be watching this kind of consolidation here, waiting for an eventual breakout. We all know these kinds of patterns are often called pennants. From a pennant, you know that after the consolidation, eventually you get a break, which gives the market a direction. So the UK 100 index, here we are looking at one market that was making big leaps upwards, similar to other European markets. But then yesterday was a big red flag after the big red candlestick. So from the 4-hour chart, this is how it's looking like. From the 1-hour time frame, you can see after the big sell-off early this morning, the market attempted to move up, but it's being met with more bearish momentum. Here, the likely outcome is an extension of the bearish momentum, perhaps back to 86.97. So this could be as a result of profit taking. All those people who have been buying the dip may be taking profits now, and now that would lead to some temporary pullback. So Euro USD on the back of a strengthening dollar. So yes, this morning the dollar has been strengthening, but over the week it has been the euro gaining against the USD. So currently we are looking at a market that retested this area here. So we could be seeing some temporary pullback, but overall we expect to see the euro gaining more against the USD. So clearly, after the pullback and the strong rally here, yes, we had a trend line break. I would say this was our big trend line break. So I'm just trying to craft it here. So if this was our big trend line break, notice from the high to this other high. So at some point, the market broke this particular trend line and rallied higher. But then we are seeing the potential for a pullback. And of course, the last significant price action level was this area here. So here we could be seeing the Euro USD bouncing from this area. So yes, we are seeing the dollar make some strength against the euro. So potentially we could be seeing the market performing such an action here. So it hasn't happened yet, so it's more of a wait and see. The pound is really struggling to break above the current levels. We are talking about the price action area 1.34688. So what we are seeing on the short run is more of a consolidation. So if I had to trade a triangle, then I would consider this one. So this is more of a consolidation that is pretty balanced, which basically implies that in a very short while we should be seeing a breakout. So the breakout could potentially be on this side on a strengthening dollar, and on a weakening dollar could be on this side, which would likely lead to a trading idea. So it hasn't played out yet, so we continue to wait and be patient. So our USD bounced as we had projected on Tuesday, then went all the way back to the previous high, and then today we are seeing the market retesting this area here. So kindly note that this area here seems to be quite significant. So here the market went up, tapped the area, and is now moving back downwards, which likely implies that the market is headed much lower, potentially retesting the day's low. So here for our USD, with what we are seeing with a strong dollar, good chance that we see the market retesting this area. So USDN continues on the same path. So even though the dollar seems to be quite strong, notice how the dollar index is strengthening as of this morning. Then for USD JPY, I would still be very bearish. So the idea here is if the market kept pushing higher, then if there's a retest of this particular trend line, then the idea is to be looking for bullish positions. So in this case, yes, we are seeing a strong bounce here. So the idea is to be looking for potential bearish entry at similar levels around 143.982. So gold continues with its bullish momentum. Here we are seeing another turn of events. Gold is seemingly turning or changing directions before even getting to the trend line. But then from what we can gather is that since the week started, gold has only been bullish. So don't be fooled by the pullback we are seeing here. At some point, we expect the bullish momentum to continue. So if you look at the daily time frame and you look at the last 3 days, they have been pretty convincing that gold is on a bullish path. So despite the early morning gains, we are seeing some pullback here, perhaps looking to tap some liquidity around some key levels that were left with tails yesterday. And then once we get to those areas, then potentially a bounce from there. So that 296 may as well be a potential target area where the market could potentially hit and then bounce towards the upper side. So we don't know this yet, so we are only speculating. Then we wait and see. If it plays out to be true, then we take advantage of that. So crude oil, Brent crude oil was on a strong bullish momentum. For those who are on my personal Telegram channel, yesterday we talked about this, where the market had opened with a gap. We expected the market to drop and close the gap, but then the market kept on moving further downwards. And here we are looking at a full-blown sell-off. So the sell-off has continued, and of course, as we talked about these book patterns, for those who are new to this and to technical analysis, you should know that whenever you have a channel like this, and the market breaks the channel towards the lower side, retests and continues in the same direction, then the idea, if you decide to go for the trade, is to target all the way down to the base of the channel or to the lowest point on that channel. So this one played out as expected, and now we are seeing a strong bounce. But then since the OPEC is returning with more oil supply, despite slowing global economies, then in this case, we expect overall oil prices to be dumping and basically going further downwards. So New Zealand USD just bounced off the upper trend line. So in this case, we are looking at one currency pair that is really determined to change direction. So this played out yesterday, and now we are looking at a potential continuation. And with a strong dollar, good chance that we see the market retesting these areas here. So we have silver here testing a major resistance area on the 4-hour chart. So on the 1-hour chart is how it looks like. So good chance that we see some form of pullback, perhaps even a retest of some of these areas. So we are looking at 33,200. I would say 33.221 dollars per ounce of silver. So good chance that we see the market retesting this area here. Then European equities, which were making news on Monday, pushing towards all-time highs. They have also been humbled too, and we are seeing some pullback playing out. So in this case, if you look at the EU 50 or the FTSE, sorry, not FTSE, but the Euro Stocks 50, you would notice that we have already hit a critical junction, and the critical junction is basically the lower trend line here. So good chance that we see the market bouncing from this area here and then getting back to the upper side. So for the German stock market index, the DAX, notice how the market has really been struggling to get into newer highs. And as of this morning, we are looking at a market that is potentially bouncing from that area. So in this case, if we are looking for a target, it would be this area here. So if we have this bounce playing out, good chance we get to 24,080. The biggest rally, as we have seen over the last 10 days, has been the Spanish stock market index, which basically, I would say from the pullback here or from the sell-off, it had gained by about 27%. However, since yesterday, you'd notice that the market is taking some steps backwards, indicating some level of reversal. And if that be the case, if you look at the 15-minute chart, then it's clear that this market already broke towards the lower side, retested, and is now continuing. So good chance that we see the market going for even lower levels. Of course, the next available level is around 14,117. So for the German stock market index, Spanish, French, and the Euro stocks, then we are basically looking at the same thing, all equities markets taking a step backwards. But remember, the long-term trend is bullish. So for USD CAD, clearly the dollar is trying to push for some gains against the Canadian dollar. So this was the lowest price action for a while. So in this case, if the market is making a rally, then good chance the market is looking to retest these areas here around 1.39. So I'm checking on the comment section, and shout out to Paul Carey for being the first person to join and comment. Hello, Robert Kavare, Maureen, Thomas Mashuma, welcome back. Haven't seen you in a while. Good question here. Are you supposed to analyze charts once news are released? Technical analysis. Yes, you're supposed to analyze or do your technical analysis after the news, not before. So once you get the news, of course, you fit that to your model. So for instance, if you're looking to identify key levels in a chart, you can do that before news. If you're looking to understand the impact of news, then you wait for the data, you read the data, and then you interpret the data. But then when it comes to executing a trade, I highly advise that you don't go for trades before news. This is mainly because of the unpredictable outcome of news and the increased volatility that comes from the news. So when do Asian session open and ends? There's no such thing as Asian session. We just combine two sessions. We basically combined the Australian and the Japan sessions, commonly known as the Sydney session and the Tokyo session. So you can find these on Baby Pips. Just go to Baby Pips, and then from the menu, go to their tools, and then look for Forex market hours. So that will show you the exact time in real time. Whenever the market is open, you'll know which session is open, when it opened, and when it will be ending. So morning, Tony. You can see Charles Palmer in the house. Good morning. Masika Tana, Francis Wanjohi, and Julius Pushero. So thank you guys for joining. Thank you for your time. And I hope to see you on the next session. Remember, if you don't have a trading account, check the links in the description below and register for a free trading account. Of course, you'll get a free demo to practice your ideas before you go on a live account. At the same time, if you haven't checked out the latest episode of the Bullish Banter podcast, make sure to check it out where we share deep insights on what's happening in the markets. In this case, we hosted Robert Mbogo, who is also a co-host here in the Market Snapshot series. So make sure to check out the latest episodes as well as the prior episodes. Of course, if you give us a share, feedback, that is always much appreciated. So other than that, enjoy the rest of your trading day, and I hope you have a profitable week.